Hey everyone, welcome to Smartino FX, the channel where I break down crypto, forex, and smart money strategies, especially for viewers right here in the United States. It's tax season, and if you've been buying, selling, or even swapping crypto, the IRS wants to know about it. So if you're wondering how to file your crypto taxes the right way in the US, this 2025 guide is for you. I'll walk you through what counts as taxable, how to report it, and which tools can make your life easier. First, what does the IRS actually tax when it comes to crypto? Selling crypto for USD? That's taxable. Trading one coin for another? Also taxable. Spending crypto on goods or services? Yep, taxable. Earning crypto from staking, mining, or airdrops? That's taxable income. But simply buying and holding crypto? Not taxable. Next up, you'll need detailed records of every transaction. That means dates you bought and sold, how much you paid, how much you earned or lost, and wallet addresses or transaction IDs if needed. If you use platforms like Coinbase, Kraken, or Robinhood, you can download your tax report directly from your account. Now figure out whether you had capital gains, from selling or trading crypto, or ordinary income, like mining, staking, airdrops, or rewards. Short-term gains, meaning you held your crypto less than 12 months, are taxed like regular income. Long-term gains, held over a year, get a lower tax rate, usually between 0 and 20% depending on your income level. Don't try to do this all manually. Use trusted crypto tax software that's US IRS compliant. Top tools in 2025 include CoinTracker, Coinly, TokenTax, and ZenLedger. They sync with your wallets and exchanges, auto-calculate your gains, and generate tax forms like Form 8949 and Schedule D, ready to file. When you file your federal taxes, you'll answer the crypto question on Form 1040. Did you receive, sell, or otherwise dispose of digital assets this year? Be honest, the IRS is tracking crypto more closely than ever. Then attach your Form 8949 and Schedule D for capital gains, and Schedule 1 or Schedule C if you earned crypto as income. Here are a few mistakes that get Americans in trouble. Not reporting small trades. Even $5 trades must be reported. Thinking crypto-to-crypto trades aren't taxable. They are. Forgetting to include staking rewards or DeFi income. If in doubt, speak with a tax professional who understands crypto. If this video helped you understand how to file your crypto taxes in the US, smash that like button, subscribe to Smartino FX for more US-focused crypto guides, and drop a comment if you've started your tax filing yet, or need help with anything specific. Disclaimer: this video is for educational purposes only, and is not tax, financial, or legal advice. Please consult a certified tax professional or CPA familiar with US crypto regulations before filing your taxes.